The largest net short position is right now. So in 2011, we had the same net short, which means all the leverage that is against the price, the betting that the price is going down, we haven't seen this since 2011. And look what happened in 2011. You dropped down a little bit and then you pump drastically out of there. So what happens is you get a short squeeze. People that are short have to cover their positions, and then it starts a waterfall effect in the opposite side. So they're betting that it goes down, it goes the other way really quick. And then people have to sell their position and buy back higher and higher and higher, and that's what makes the price pump out of nowhere. So we have a record number of shorts betting against the market right now. Now, I'm seeing all of these anti-XRP accounts, all these anti-XRP YouTube videos. Some of this stemmed from David replying to a couple of them, and then it's gone to a point where my feed is just filled with anti-XRP people. So I want to play this clip that I found a while back. Listen to
well over half of our total transaction volume, because we do have a fiat and XRP enabled product called on-demand liquidity. Over half of all of our transactions go through XRP now. Over half of all of our transactions go through XRP now. That has grown. And so
everyone's FUD argument always revolves around they'll just use RippleNet and fiat. They'll never use XRP. Here's Brad telling you over half of customers use ODL now. Everyone that's using RippleNet uses ODL. Half of them uses ODL. So the other argument is that Chris, Ripple has way too much XRP and they're just dumping onto the market. The supply outweighs the demand. Well, this is a fair argument. And I'm not a fan that Ripple has so much XRP. I'm not a fan that Chris and Brad have so much XRP. However, the results is that they've used this very they've been promoting the growth of XRP. They've been doing everything that they said they were going to do, right? The people that distribute XRP into the market are professionals. They're not trying to destroy the XRP market, which some of the FUD people say that that's what they're going to do, right? So there is somebody that knows the market very well and distributes the XRP into the market, trying not to ruin the price action. And, if you look at CoinGecko and you look at all the different exchanges that have XRP, you could see the depth. So this means if they were to buy $2.6 million worth of XRP, you would pump the price 2%. If you were to sell $1 million worth of XRP, you would drop the price 2%. Now, all of these exchanges are interconnected. What I mean by that is if one of these pumps to 47 cents, you can buy from another exchange at 45 cents, move it to the other exchange, and that's called arbitrage. So all of this liquidity is kind of tied together. It's not just one exchange and that's the price. All of this is tied together. Now, the other FUD argument is that Ripple can just make a new token out of nowhere. They just make a new token. Well, all these exchanges would have to list the newer token. You would need to get buyers and sellers of the new token. Who would trust a new token if Ripple just released a new token? All of this was evolution, right? This happened from a natural progression of XRP. This started almost 10 years ago. And this was hard work. This was people doing this. This wasn't just, Ripple pushing buttons. This was a natural evolution of buyers, sellers, demand, people asking exchanges to list XRP, people reviewing XRP. Not to mention all of the statements that Brad has made, all the statements that David has made, that could all be used as evidence to sue Ripple in the future. If they were to do something like make a new token to replace XRP, guess what? They committed fraud. So I really doubt that's what Ripple's trying to do. That's not, I've been following Ripple for a very long time. It's not like they're scam artists or anything. They have a plan, right? And their plan revolves around XRP replacing the traditional system. The Internet of Value is their plan. And I've seen nothing to say that they're bad actors, anything like that. And, you know, if you want to say that, that's your prerogative. But I do not see that. And if you're watching this channel, you probably agree with me. So most of the FUD statements just don't make any sense to me. You know, even the distribution of tokens, you could see that, you know, we're still moving up, right? We've had this entire move up. We're just following the markets, really. So we will see what happens with the SEC lawsuit. That should be coming soon. You're above the 200-day. So you had 700 days. Let me get rid of this line. Just to put this in perspective, all the FUD comes now. You know, after 700 days of waiting. See, 700 days? You broke out of this trend line, and now you're above the 200-day. So you hit your head on the 200 week, you're coming down to the 200-day. This is a bullish setup. It just started, though. Yet, this is where max FUD comes into play. Now, Lazarus wrote a tweet that points out that the SEC claim that their token framework status of development is a relevant factor for the determination of the security status, yet in their lawsuit, they say the status of development is not relevant at all. So, the SEC continues to contradict themselves. We're waiting on Judge Torres, and we're finding more and more information that the SEC is continuing to contradict herself. So Judge Torres has even commented on that a couple of times, saying that the SEC is contradicting themselves. I believe the other judge with Binance and Voyager has said the same thing. Now, Credit Suisse has seen a $69 billion in assets leave the bank in the first quarter. Over the last 6 months, $225 billion in assets. The banking system is interconnected. All of these ledgers have to match each other. All assets and liabilities have to match. If you were to take $1 out of the banking system, it completely failed. So somebody has to eat these losses. $225 billion, that needs to be eaten by someone. What I think is that this is a much bigger number. These are more banks that have the same exact problem because collateral has dropped 50%. So there's a ton of money out there, yet the banks have lost half of it. And it's going to show up soon. Now, at the end of the day, I think the central bank is going to absorb all these losses. And that's going to put their balance sheet really high. They're going to absorb all the losses of the banks and put it on their balance sheet. When that happens, you're going to see the debt expand exponentially. And I believe that's going to be the catalyst for the next crypto gold bull run. Zum has made a significant leap in e-commerce, bringing the XRP ledger payments to 1 million plus stores. They partnered with this company, SWID by Lightspeed. SWID allows merchants to sell products, and you're able to integrate this payment method into your website. So if you're selling sunglasses, you can accept payments through this platform. This platform now is using the XRP ledger for cross-border payments. So if you have a website where you're selling something, you can use this service, and they use XRP on the back end. Now these stores have a tremendous advantage over other stores regarding cross-border payments. They're getting much better rates. They don't have to pay nearly as much as other stores have to pay. So they're at an advantage just by using this service. I think this is naturally going to expand because it's a better product. It's cheaper and quicker than other products. And I think that's going to naturally expand by itself. Zimbabwe to introduce a gold-backed digital currency. So we saw Zimbabwe suffer hyperinflation. Central bank printed too much money and they had hyperinflation. Now we're seeing different central banks accumulate gold. This is the insurance policy. If your currency is to hyperinflate, you can use gold to stabilize it. Now, we've seen all of these, we've seen different currency pairs against gold surpass all-time highs. Yet, USD pair has only triple topped. So we're in this area of resistance. We have to break above it in order to go higher. Right now, this is resistance, so it would make sense that we have to either break it or we're going to come back down, retest some of these areas, and hopefully build up some momentum and then move forward. So the central banks are accumulating gold, and that's because they have an insurance policy with gold. Now, what's interesting is that the BRICS nations, 19 nations, submit membership requests ahead of the annual summit. There's only 195 countries out there. 19 nations want to move away from the dollar and dollar hegemony. That's like 10%, maybe a little bit less, maybe a little bit more. 10% of nations don't like the dollar. They want to move away from it. Not to mention the U.S. doesn't even like the problems that we have. We like the control of the dollar. However, we're hollowing out our manufacturing. We have Triffin's dilemma. We have the problem of not having enough industry in the United States and exporting all of that. That's why Biden's doing the CHIPS Act and trying to bring semiconductors onshore. Because if we were to have a war, our supply chain is globalized, and we need a supply chain that's within our nation. This PDF came out today, and it's from the IMF, Hiromi Yamako. He's the chief advisor, international finance, Tokyo Metropolitan Government. And this, he's from the IMF, the BIZ, the Bank of Japan. He wrote this deck, and in this deck, it talks about the different types of CBDCs, the issues with CBDCs, some of the problems and impacts, how they're going to go about CBDCs, and one of the things that they talk about is cross-border payments. So with cross-border payments, as long as each CBDC is denominated by each sovereign currency unit, cross-border remittances will continue to need a conversion between different currencies, even if such CBDCs are issued. So still, if everyone had a CBDC tomorrow, that does not solve the problem of cross-border payments. Now, you must remember that the central banks, they're testing this. They're experimenting with CBDCs. They're not anywhere near live solutions. Yet RippleNet, a private company, is applying this technology and using it today. They're actually using it. You heard Brad, over 50% of RippleNet transactions are using ODL. This is proof, this is confidence, these are over time, the more people that use it, that's confidence. You can show that to potential customers. We've been in business for 6 years. We've moved this amount of money. If you want to tap into this rail, you can. You can move X amount of money per day. Now, it mentions how can private initiatives, e.g. Swift GPI, contribute to solve these problems. Swift is trying to set up a different solution. RippleNet has theirs. But still, this is confidence in Ripple. The more that they are able to move money through XRP, the more it proves itself. Dante from Circle was in front of Congress today. He wrote this speech that he gave in front of Congress. Now, I want to mention, years ago, this rarely happened. Rarely, Facebook had Diem, and that started it. You saw more and more people in Congress talking about crypto and CBDCs. Now it's at a point where it's like every other week they're talking about crypto and CBDCs. So things are picking up. on the regulatory front. Things are going to happen from this. It's building momentum. He talks about WorldPay, MoneyGram, USDC's use case. This is Caitlin Long. Caitlin Long is suing the Federal Reserve. So Operation Choke Point was a failure. It caused a lot of problems with banks and the government. Now, they're trying to do Operation Choke Point 2.0. That's why Caitlin Long was suing the Fed for. This is an IMF document that came out today, Central Bank Digital Currency, CBDC, Global Perspective. We tend to overestimate the effect of technology in the short run and underestimate the effect in the long run. This document also highlights some of the problems with CBDCs. Now, the duality nature of CBDCs. It's showing infrastructure. So infrastructure, that not only does a central bank digital currency have a coin-like property, but it also has a property of infrastructure. This infrastructure doesn't need to be made by the central bank. They can mint this coin on public ledgers. And I argue that that would be a better way to do it, right? They could still sanction this coin. They can do whatever they want with this coin, but they don't control the railways. And you're seeing the political movement against CBDC. This potentially could be a solution, a hybrid solution of using blockchains, public asset, crypto ledgers, and having the Fed just mint coins or the central bank just mint coins on the public ledger. And I think ultimately that would be the most fairest and most cash-like. So the evolution of cross-border payment networks, reducing the cost of verification and cost of network, shifting trust from identity to object, underpinned by technology, shifting trust from bilateral relationships to multilateral networks governed by common rules. So again, we're having an issue of trust. When you set up these bilateral relationships, those are just a chain of trust. And that's where all the costs come in. That's where all the friction comes in and the slow times come in. With crypto ledgers, you can remove all of this and just have one trusted protocol. Now, they're trying to make it walled garden after walled garden. That's what they've been doing because they're too cautious to jump into open ledgers like crypto assets. So they're making all these walled gardens, but they still need something to connect all the walled gardens. They still need something for all the walled gardens to communicate to each other. Now, there is no counterparty risk with CBDC. So you've seen stable coins like USDC depeg. You've seen Luna crash and go to zero. With a CBDC, there's no counterparty risk. You don't have to worry about a bank somewhere. And you can see there's all different ways to set this up. There's no one solution. They have different ideas for everywhere. Now look, Brazil, China, and India are the quickest to innovate. They're also the quickest to join BRICS and try to remove themselves from dollar hegemony. And you can see privacy with cash, financial. They're discussing all the things that we've been discussing. They're working this out, right? So now Rentero is attempting to tokenize vacation rentals on blockchain using the XRP ledger. These are new ODL customers. Thanks to Wrath Economy, there's these new ODL customers came out. You could see there's quite a few of them. This is some of their websites. Some of the investors in some of theirs. So Financial Health Network, which seemed like a pretty decent size. Lions Express. Now, this is interesting. They're using trades, and not only is it remittances and freelance work, they're starting to move into trade. You can see Cargo X, which is moving money to Brazil. Cargo X, and you can see the Brazilian flag there. Mining metals, power, infrastructure, waste, connects with its key contact projects and shareholders. So the use case for XRP is expanding. It's just proving itself to everyone that wants to dip their toe in this water. If countries want to have some type of digital solution, this is proving itself. Like we're seeing with the rest of the central banks are writing documents about this. The private sector is already ahead. They're already doing it and they're proving themselves. Now, I also wanted to show you whatever that. So everybody is really bearish right now. And, you know, there's good reason to be. There's pockets underneath us. So if something really bad happens, we can go down quick. But I must say, we are still in this uptrend. You can say this is a rising wedge or rising channel, and that's usually bearish, but this is an uptrend. You know, so it's very possible that we move up further. I showed you with the amount of shorts, with everything that's going on, there's a lot of cash on the sidelines. I was listening to Rick Roll, and that's what he was saying. There's a lot of cash, so he thinks it's more likely that there's a melt up versus a melt down. So you melt up, you shoot way up, and then crash. So that's very possible. Now, I want the markets to be bullish because I'm an XRP bull. I want this to have momentum. When we finally get our summary judgment, what's going to happen with XRP, I would prefer the markets to be bullish versus bearish. I hope you guys enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon or my Ghost site. My Ghost site is dmjr.ghost.io. They accept Stripe instead of the Patreon service. So thanks, everyone.